global markets, after going through a couple of days of volatility, have rebounded today. This has primarily been on account of the Fed chairman signaling a rate cut in the coming monetary policy, as well as the trade talks between US and China have gone in the positive direction. They have agreed to put on hold the trade barriers currently. Overall, the positive dovish statement from the Fed chairman has led the dollar to some amount of weakness, and that's caused the indices in the US markets to go upwards. S&P has hit a lifetime high of 3,000 odd levels for the first time, and concurrently Nasdaq and Dow also have gone on the upside. Overall, the global markets as well as the Asian markets have taken heart from that. The Indian markets, however, have remained volatile through the week. Today they have rebounded. However, for the entire week, after touching a high about 11,981 odd levels, it does a low about 11,461. Primarily, the weakness has been on account of the negative signals in the budget with the taxation on the rich. No specific provisions for providing a growth impetus to the Indian economy. So that's led to a correction, and overall for the week the markets closed about 11,582 odd levels, signaling a downside of about 3.05% on a week-on-week basis. All the indices that were in the market have been negative except for pharma, which was up by about 0.79%. The indices that didn't do well were auto, which was down by about 5.2%, and metals was down by about 5.3%. For the coming week, in terms of our outlook for the Indian markets, is relatively weak, primarily on account of the negativity coming out of the budget on with the FPI outflows, the taxation on the rich, and the growth scare that the Indian economy is looking at. However, from a long-term perspective, we are positive about the Indian markets on account of the relaxations in the budget that have happened for the key sectors, the FDI relaxations that happened for key sectors. Also, in terms of the PSU bank recapitalization that will enable and push up the economy. Global markets are also looking positive. In terms of our stock recommendations for the year, we have a buy recommendation on Kajaria Ceramics. We have a target price of 650 odd levels with the stop loss at about 530 odd levels, signaling an upside of about 16%. This stock has been going positive in the past few days. There is a strong result that they have projected with respect to Q4. The volume growth has been 11%. Overall operating margins are at about 15%. We expect the stock and the business to grow at about 14 to 15% in terms of volumes. Also, the market share is expected to grow upwards towards 14%. They are increasing their advertisement and marketing spends to have a bigger say for the brand. The different product mixes that they have are going to contribute significantly on the top line. While the stock is expensive with a 38 P level, however, in terms of the ROC being 26%, and our outlook being a 16% growth volume growth for the stock, we do expect a significant upside in the coming year. So that's our recommendation. Thank you.